Well, hello everyone. My name is Greg Dennett, and I'm the president and CEO of your Hamilton Chamber of Commerce. And thank you so much for joining us for our first webinar on Small Business Week. Small businesses are the lifeblood of our community, and they are just an absolute essential to a thriving city and neighborhoods. And so it's incredibly important that we highlight and create tools and resources to help our small businesses. Small Business Week, there are over 1.2 million small to medium enterprises in Canada, and 98% of the businesses here in Canada have less than 100 employees, but they generate over 54% of Canada's gross domestic product. In totality, there's nothing small about small business, and it is my absolute pleasure to kick off this week by introducing Keith Dieroff from Scotiabank. Keith is the Small Business Development Manager for small businesses here in Hamilton, and he's going to do his presentation on banking advice for business owners. And only other thing I'm going to mention before passing it off to Keith is our small business programming continues leading into Hamilton Day weekend, November 1st to 3rd, and we'll highly recommend everybody go and check out hamiltonday.ca for all the programming. But on that note, Keith, over to you.
Okay, thank you very much, Greg. All right, hello and welcome. I'm going to talk a little bit today about a few things related to small business banking. Let's get an agenda up here. I'll do a few introductions. We'll talk a little bit about how to pay and get paid more efficiently, how to maximize your rewards and offset the cost of your banking, and funding your business expansion and growth. And then if we have a little bit of time left over, I have some bonus material on small business saving and investing. So let's jump right in and do a few introductions. So my name, of course, is Keith Dieroff. I am the Small Medium Enterprises Team Lead. That is a brand new title, like literally just minted. So Small Business Development Manager was my previous title as of last week. This week, I am a Small Medium Enterprises Team Lead. And going forward, that's what I'll be. But I do have a team, a fantastic team of business banking advisors located throughout the Hamilton area, Ancaster, Dundas, Hamilton, Stony Creek, all really super people, super advisors who are willing to learn about your business and give you advice on how to do your banking and your business banking better. So with no further ado in terms of introductions, I'll launch right into it. So let's talk a little bit about how to pay more efficiently. So the one thing that I will say is, there's certain ways to pay that are not very efficient. So cash, checks, and debit are the most costly and unsecure ways to pay for almost anything. Honestly, when you bring a check into the bank, a lot of times the bank will hold it. The reason that there is so much issues around checks is that on a day-to-day basis, the bank is dealing with a massive amount of fraud. A stat from the Canadian Banking Association is that roughly 1 in 3 checks in the system are not good. When you walk into the bank and you present a check, a lot of times the bank will hold it or tell you that, they're not going to cash it right away. So checks can be subject to hold. Cash is a very costly way to deal. The reason debit is on the list there is because, if you're going around with your banking, your debit card, and you're paying for things, every time you do that, it counts as a transaction. And that is going to, depending on what kind of account you have, you will be charged for that. So all of these things, cash, debit, manual, or cash, checks, and debit are all very manual and time consuming. And you can see the last little picture on the bottom there, and that's the lineup in a branch. That's the place where, honestly, from day to day, I work at a branch. I go out there, I see small business owners in line. And I feel badly for them because, I know you're very busy. Time is money. And every time you have to stand in that lineup, it's time that's being taken away from your business and from your clients. So I'm going to let you in on kind of the first secret that I'm going to kind of reveal about banking within within this seminar. And that is, a lot of people think that, if you come to the branch and you deal with a teller, that you are helping tellers keep their jobs. That is a myth, unfortunately. If you come into the branch and deal with a teller, the bank has made decisions on how they're going to staff their branches. And it doesn't matter whether you come in or not, unfortunately. There's going to be a certain number of tellers that there on any given day. And you really can't have extra tellers. When someone comes in and says, "Wow, it's so busy in here, why don't you have more people on?" We don't have more people to put on. So that's kind of secret number one. It doesn't matter if you come in or not, there still will be the same number of tellers. Okay, so if cash, checks, and debit are the most kind of costly and unsecure way to pay for things, so what is a better way? So let me introduce you to a couple things here. So electronic funds transfer. So this is a great way to pay expenses, pay your employees, pay your suppliers, and it works by transferring money directly from your bank account to another bank account anywhere in Canada. So you can see there it says push and pull. What that means is that you can make payments through EFT or electronic funds transfer, or you can ask for payments. So you can pull payments through EFT as well. So that's really good for businesses that have memberships. So if you own a karate club and you have a bunch of people who pay you every month a set amount, you can set up an EFT limit, and every month you can pull all of those memberships into your account by setting it up through electronic funds transfer. So great way to pay for things. It's low cost. You can schedule your payments up to 60 days in advance. You can schedule recurring stuff. You can have online review. You can have multiple approval levels on payments. So if you're the business owner and you have an accountant and the accountant sets it up and you want to have the final say on whether it happens or doesn't happen, you can set that up as well. So first way to kind of pay for things more efficiently is through electronic funds transfer. I see there's a question, and I see somebody has acknowledged it, but I don't see any questions in the chat. So I'll just keep going until one does show up. Okay, so electronic funds transfer is the first way. The next way is wire payments. So wire payments, you can securely send funds anywhere in Canada or internationally. This is great for people who are control freaks. If you come into the branch and you send a wire payment, after you leave the branch, you don't know what happens to it. You don't know where it is in the wire system. You don't know when it arrives at the receiving branch. You don't know if the person who you sent it to actually has received the wire. So if you sign up for wire payments through Scotiabank, you get to track the wire. So you get end-to-end authentication. You input the wire information online. You can watch it go, where it is in the wire system, when it gets to the receiving person's bank account even. And you have full control over the process. Again, you can create templates for recurring payments. So if you regularly pay a supplier and you're paying them, a different amount every month or something, you can create a template for a payment to that supplier, and then you just pull it up and you send the wire. So wire payments, EFTs, much more efficient ways to pay for things than cash, check, and debit. So we also have a whole bunch more payment solutions. We have international money transfer, which is like an EFT, but outside of Canada. You can do e-transfers for business. So that would be like a regular e-transfer that you would do, with your friends for lunch or whatever. We also have that for business. We have bulk services for e-transfer. So if you want to send a whole bunch of e-transfers at once, you can do that. We have remote deposit. So, one of the things, and I've shown the lineup there again, that we see is small business owners in line with a bunch of checks. So if you're the type of business that is doing that and you want to get out of the line, you can have remote deposits. We can give you a check scanner. You can sit in your office and scan the checks, and you never have to come into the branch. You can also pay your government taxes through online as well, and you can get access to something called Scotia Red. So for people who are dealing internationally, or if you're paying international suppliers, sometimes you want to get the best or a better rate of exchange on the currency that you're dealing with. You can sign up for Scotia Red and you can get better rates, spot rates, and you can improve your efficiency on foreign exchange as well. So all of these things that I've been talking about, so we've got electronics funds transfer, wire payments, and all of these things, they're available through something called Scotia Connect. So it's a cash management services. So here's the second secret that I'll kind of let you in on, is that it takes a bit to get used to. So if you sign up for Scotia Connect, the typical journey for customers is that when they sign up for it, they're really excited about it. When they use it for the first time, they phone us up and they want to kill us because it is hard to figure out. But then the journey goes like this. They use it a few times, and then once you get the hang of it and you're using it regularly, you will never want to go back to the other way, or you will never want to stand up in the lineup again. So you have to stick with it. When you sign up for it, you get a password and a secret word. And my recommendation is that, if you sign up for it, don't sit on it for 60 days and then go and use it, because you will have forgotten everything that you got when you signed up. So go in, explore, try and use it, do a few tests, get used to it. And like I said, you will never go back to paying for things the old way or standing in the lines. All right, so that is a little bit about how to pay for things more efficiently. So I will move on, if there's no questions, to how to get paid more efficiently. Okay,
Keith.
So again, yes.
Hey, Keith, it's Greg here. There was a question from Paul. Is EFT pull the same as PAP?
I don't know what PAP means, but
I don't know either.
EFT
So
pull, if you're talking about something like a pre-authorized payment, yes, it is very similar. So if you're the person who's at the karate club and you give the karate club your information to do a pre-authorized payment, on the other end, what they're doing is an EFT pull. So that's how that works.
Paul says yes, pre-authorized payment. So that was the question.
Yeah. So EMT is the other end of that.
Okay.
All right. Excellent. Okay. So I put this slide back in here because I just wanted to kind of touch on a couple other things while I'm here. Cash, checks, and debit are not only the most inefficient ways to pay for things, are also the most inefficient ways to get paid. So you may have experienced walking into a branch with a check from a customer or from anyone else, and the bank will put a hold on it. So again, the reason behind that is the bank from day to day is dealing with a lot of fraud. So it's not that they don't trust you. They don't trust the check system because there are so many different ways to manipulate it. So there's a couple things you can do. So the first thing that you can do is talk to your banker. So if you go into the branch and there is a small business banker in the branch, go in and just introduce yourself. If there's not a small business banker, find the manager, find the assistant manager, go up to them and say, hey, my name is, this is what my business does. From time to time, I will be bringing in checks. I just want you to know who I am and what I do. So that's the other kind of part of the equation is like, what does your business do? If you're running a restaurant, tell them about your restaurant. If you're running a small manufacturing, if you're running a consulting service, just tell them what you do and kind of what they can expect to see from you. These kind of things don't take a lot of time, these introductions, but they can really help you going forward. Because if something does happen, and you land a big contract and you get a wire that comes into your account for $50,000 to pay for it, the first thing the bank manager is going to do is put a hold on that money and try to figure out what's going on. So if they already know who you are and you have a relationship with them, it's easy for them to pick up the phone and say to you, hey, what's going on here? You tell them what's going on. They already know who you are. It just makes life a lot easier. So that's one thing I will say is try to get yourself known within your bank. It'll make your banking a lot easier. The second thing is, if we're asking you questions about your business, you know what? We truly are curious about your business and what you do, and we want to learn about what you do because we want to help you. It's not that we're nosy. It's not that we want to get all up in your business. We want to know what you do so we can help you do stuff like get paid more efficiently or pay more efficiently. So, secret number 3, I'm going to kind of reveal to you about banking is that when you go in to open a bank account, so if you're starting a new relationship with a bank, and if the bank offers you credit, you take it every time, because the secret is that a lot of times this is a one-time deal when we're starting in the relationship. If you qualify for credit, you should take it. And the reason being is that it can help with stuff like check holds. So say you go in to open your bank account and the business banking advisor says, you qualify for $5,000 in credit. How would you like to take that? And if you don't need a visa, if you don't need a line of credit, take it as an overdraft protection. So what that means is that they'll put an overdraft limit on your bank account so that if you bring in a $3,000 check and you have a $5,000 overdraft limit, and you might have noticed this if you have an overdraft limit already, is when you go into your online banking, you'll see your balance and then you'll see an available balance. So your balance is 2,000, but your available balance is 7,000. That's because you have an overdraft limit. So if you put a $3,000 check in there and we put a hold on it for $3,000, you still have the overdraft limit available. So this will help with stuff like holds on checks. If you have an overdraft limit, the bank has already approved you for credit. So it will just make your life easier. So don't ever, when you go into the bank and open a new account and they say you qualify for credit, don't ever say no. Take it and run, because it can help you in so many different ways going forward. So if you qualify for 20,000 and you want a $10,000 visa and a $10,000 overdraft limit, that's great. If you find 5 months down the road that you need a $5,000 overdraft limit and a $15,000 credit card, once you have that credit approved, it's really, really easy for us to change that kind of stuff in our system. There's no approvals, there's no hits on your credit bureau. We can just make a change because the credit has already been approved. So that is kind of secret number 3. So how do you get paid more efficiently? One of the ways you can do that is through merchant services. And most small businesses will have some kind of merchant services. A lot of people buy based on kind of setup costs, price, or amount that they take from every transaction. And Clover is popular. Apple Pay is popular. There's a bunch of different formats that are really popular. But I will say this. So if you have merchant services, shop around, talk to your banker about what's available through the bank. Most banks have partnerships with some kind of merchant services provider. And because of that partnership, there are incentives that are involved in that, whether it's, free setup, reduced banking fees, reduced percentages per transaction based on your relationship. So merchant services are the easiest way to accept payments. And if you take advantage of that partnership, so our partnership is with Chase Payment Tech. Because of that partnership, you get certain things. You get reduced costs, so you get a free bank account because you're with Chase. So if you have our Select Account B for business and you have Chase Merchant Services, your bank account is free. So that's a $40 savings per month. The other benefit is that you get paid faster. So those of you who are using Clover or something else will notice that it can take like 48 hours to get your money from them. So if you're with Chase and you're with Scotiabank, you get paid the next day. So you get paid faster, it costs less. And the other benefit that you get is when you sign up, someone will call you from Chase and talk to you about your business. And again, it's not because they're nosy and they want to know what you're doing. They truly want to get you set up on what the best option is when it comes to your merchant services. If you need a combination of a static terminal plus a wireless terminal, tell them that. Tell them how you do your business. And they will set you up with the best and cheapest option that they possibly can give you. So merchant services is the way to get paid more efficiently. And the one thing that a lot of people don't know, like with Chase, they have in-person terminals, but they also have a e-commerce platform. So if you want to do something that's a combination of both, you can talk to them about that as well. Some people think that you have to have your e-commerce platform separate from your merchant terminal in your store. You don't have to do that with Chase and with most merchant services. They offer both. So, all right. So getting paid more efficiently, merchant services is the way to go. All right. How to maximize your rewards. So obviously, credit cards are the way to maximize your rewards. At Scotiabank, we have two options. We have points and we have cashback. So if you like to travel, points card is the way to go. So Scotiabank Passport is the way to go. You get a lot of travel insurance. You get no foreign transaction fees. So when you're outside of the country, a lot of credit cards will charge you foreign exchange plus a $2 or $250 fee. With Passport, there's no $250 fee. You're just paying the exchange. You also get access to airport lounges, which is a nice kind of perk to get when you sign up for a credit card. I personally, I've used the lounge a couple times. I love the lounge. Show up with your card and you get into the lounge and you don't have to wait in the waiting area. You can sit and have a drink or whatever and just enjoy the kind of the quiet and the atmosphere of the lounge. So travel, Passport's the way to go. If you like cashback, Momentum for Business is the way to go. And I'll kind of explain how cashback can benefit you as a business owner. So Visa in general is a really great way to reduce your banking fees. So if you pay for 20 things on your Visa versus check or debit or cash, you can reduce your bank fees by $25 to $30. And the reason for that is every transaction that you do with cash or with debit or check counts as a transaction out of your bank account. If you have a Visa, there are no fees or no transaction fees every time you pay for something. So you run around, you buy all your stuff, you do 20 transactions. When you pay your Visa out of your account, it counts as one transaction. So there are significant savings to be had there if you can use the Visa to pay for a lot of things and you have the discipline to pay it off. Okay, so that's one part of Visa and how you can save money with Visa. The second is through cashback. So cashback can be used to help offset the cost of your bank account. Let me show you how. Okay, so here you've got, suppose you have a Scotiabank Select Account B, which I already mentioned. It costs $40 per month and it includes 70 transactions. So it's going to cost you about $480 per year if you stay within the 70. So our Scotiabank Momentum for Business Visa provides 3% cash back on gas and recurring bills and office supply store purchases as well. But the gas and the recurring bills are where you're going to make your money. So if you pay for your hydro, put it on your Visa, that's a great way to do it. You pay for your gas, whatever recurring bills that you can put on there, your Bell bill, your Rogers bill, everything related to your business that you can put on there that's recurring, you get 3% cash back on. You get 1% on everything else. So $800 a month on gas and recurring bill payments, which probably for a lot of small business owners is a low amount, plus another $2,500 per month on whatever else you're buying. You could earn about $600 a year in cash back. So you take your $600, you reduce it by the amount of the annual fee, because there is a fee for these cards, and then you take your banking costs out of there, and you can see that your net cost to bank is negative $29, which actually means the bank is paying you to bank with us. So this is one of the number one ways to offset the cost of your banking. If you come in to open a bank account at Scotiabank and the business banking advisor says you qualify for X amount of credits, this is one of the things that you should take, is what we call a spend card. So this is the card that you're going to use for everyday purchases for your business. Doing that saves you money, generates you cash back, and overall just helps you offset the cost of your bank. Okay, there are other ways to offset the cost of your banking. One thing is you can maintain a minimum balance in your bank account. So each of the different accounts has a minimum balance threshold, and if you stay above that, you won't pay any like monthly fees. Again, I mentioned Chase Merchant Services. If you're with Scotiabank and you're with Chase, your Plan B account is free. The other thing you can do too is if you have excess cash sitting around in your business, say you're saving up for something, buy a piece of equipment, or you're just generating a lot of cash with your business and it's building up. If you invest a little bit of those surplus funds, right now the rates are pretty good. The GIC rates are pretty good. The savings account rates are pretty good. You can generate a little bit of money to offset the cost of your banking. So there are lots of ways to kind of reduce the overall cost of your banking. And these are kind of the ones that are the easiest to take advantage of. All right. So that's a lot of information. Maybe I'll just pause there if there are any quick questions. If not, I'll keep on rolling.
So I'll just jump in here again, Keith, just in case as you're going forward. If anybody has any questions, please throw them into the Q&A chat there, and I'll do my best to interrupt Keith at a prime spot, and otherwise we'll keep going. But just in the Q&A chat there, and then we'll ask him as quickly as possible, as appropriate as possible.
Awesome. Okay. All right. So we talked about how to pay for things more efficiently, how to get paid more efficiently. Let's talk a little bit about funding your business expansion and growth. So the thing that you need to know with funding your business is you've got a lot of options, and it really depends on three things: how much money you need, what do you need the money for, and how long you've been in business. So the first thing I'll address is that if you are a new business, the bank will view you as a startup. So that's kind of secret number 4 or 5 or wherever we're at. If you've been in business less than 2 years, the bank considers you a startup business. So what does that mean? So it means that the bank will look at your application a little differently. And it also means that you will need to be a little more creative in the way you get your financing. So the first option that we have for new businesses is what we call express credit, or we call a running start. So the bank will approve up to $25,000 in unsecured credit for new businesses, but it's going to depend on your personal net worth. Stuff like, do you own your own home? Do you have investments? Do you have an RSP? And it's also going to depend on your credit score. So bad news, folks, real talk. If you have any kind of, stuff on your credit bureau, it's really going to limit what we're going to be able to do for you. So a strong personal net worth and credit score is kind of essential to small business lending. So if you qualify for some unsecured credit at a startup, that's great. But if you don't, you have other options. Another one is what we call a CSBFP, Canadian Small Business Financing Plan, which is a government plan where you can borrow up to $1 million. There's a little bit of an asterisk there, and the asterisk is the $1 million is for purchasing real estate. Most people take advantage of this in the kind of $50,000 to $250,000 range, and it's to start their business, do leasehold improvements, fund equipment, that kind of stuff. So the CSBFP program, in order to get approved, it's going to be highly dependent on you showing up with a business plan. The bank really prefers accountant-prepared business plans. We can help you create a business plan. We have a business plan writer. But when it comes time to approve credit, when we submit it to our underwriting group, if there are accountant-prepared business plans, they carry so much more weight than something that maybe you and I put together using our business plan writer tool. So get in touch with your accountant. If you're looking at expansion, if you're a new business and you're looking at, say, buying a franchise and leasing a building, doing some leasehold improvements to make it what you need it to be, CSBFP is the way to go, but involve your accountant very early on from the beginning. So another way that a lot of people use when starting up a business is a personal cash injection. So a great way to do this is through using the equity in your home. A lot of small business owners are homeowners. If you've owned your home for any length of time, you may have some equity already built up in there. Most banks will offer something in terms of an equity takeout that you can use to inject cash into your business. I've got Scotia Total Equity Plan in there, which is Scotiabank's product for doing this. And there's a couple of interesting ways that we can do that. By adding a line of credit under your Scotia Total Equity Plan that you can use just for your business, putting a second mortgage under your Scotia Total Equity Plan, which can be used for a cash injection into your business. And again, these are things that you would want to talk about with your accountant as well, because there sometimes are some tax implications to doing this as well. But when all else fails, a personal cash injection is a great way to kind of fund your startup or your expansion of your business. The last one that I'll mention is BDC, and BDC partners will be on the call later in the week. They have a lot more latitude than the banks do to fund startups. So if you've tried the Express Credit, you've tried the CSBFP, you've tried the personal cash injection, and they all don't work, BDC is a great partner to help you get your business up and running, or expand it, or to grow it. So I will say we work with them a lot, and they're fantastic. So a shout out to them. Okay, so that is kind of new businesses and startups. If your business has been in business 2 years or more, that's a good thing. If you have 2 years of financial statements that you can come to the table with, we have a lot more options for you. So when it comes to that Express Credit, which I mentioned on the last one, which is Express Credit and Running Start, you can see we had up to $25,000. Now, if you've been in business, it goes up to $150,000. So again, it's going to depend on your business and your personal net worth and your credit score, but we have a lot more leeway there now. Loans and line of credits. We can now do up to $1 million with what's called a GSA, or a General Security Agreement. And the bank in general is a cash flow lender, and I've put cash flow as the key there. A lot of clients come to us and they say, well, I've got lots of assets, I've got lots of property, Um, I'm happy to pledge my home, my cottage, my building, whatever. Um, that's great. We appreciate that. But if there's not enough cash being generated by the business to make the payments, the bank would rather see the cash generated than the assets, because we're not really asset lenders. We're lending to you to grow your business, and what we expect to see is growth in the revenues of your business. And we're hoping that the revenues that your business is generating are already good enough to kind of keep things profitable and look for that growth.
Keith,
So, yep,
I got a question here. I think it's probably a good time to ask it. If I,
yeah,
and then I might have a follow-up for it. If I
okay,
have good credit,
yep,
however, my business partner does not, will
yep.
that affect my ability to get a business loan?
So, yes, if you try to borrow as a business. So if you are a partnership and you're Keith and Greg, and you're operating as KG Auto, and you're a partnership, and you come in and you try to borrow as KG Auto, yeah, your partner's bad credit will probably make it tough. So, having said that, if you use the personal cash injection thing and try and borrow by yourself, you'll likely have more luck. But yeah, unfortunately, your partner's credit is going to limit your ability to borrow if they have something on their credit bureau.
And I think that was probably my follow-up question is, does the format of the business, like whether it's a sole proprietorship or does that impact the ability to?
Yeah, so it's interesting when we're talking about small business lending. If you go to the commercial side of the bank, all the lending is done at the business level. So if you have a corporation, we lend to you based on the strength of the corporation. If you come in to get a personal mortgage, we lend to you based on the strength of your personal financial situation. In the small business side or the small to medium enterprise side, we look at both. So we're going to look at the personal and the business, and we're going to mesh them together. There's some advantages to doing that for both the bank and for you, but what it means is that we're going to look at the partners in the business. So whether it's a partnership or a corporation, if the person who has the bad credit owns more than 20% of the business, like if it's a corporation and they're 25% partner, we're going to look at their credit. If they're 50%, we're going to look at their credit. Same goes for a partnership. So yeah, it's very much dependent on that.
Fantastic.
All right. Okay. So I'm continuing with CSBFP.
Sorry, Keith, I'm going to
You
follow up a little bit more on that one, just as we
sure?
just
Yeah.
a bonus. It's the attendee response was they're both sole businesses. We're looking to create
Mhm.
a potential partnership. Would it be
Yep.
better for them to stay separate at this point, or not enough
Uh,
information to?
so yes, if you're looking for financing, definitely. The other thing you could do is you could incorporate and structure the corporation so that the person has an interest, but not a significant stake in the ownership. Anyway, these are questions that are probably stuff that we would want to kind of talk to you about one-on-one and look at your individual situation. I'm giving general advice here, but yeah, I think we would want to sit down with somebody and talk to them about that, and also talk to your accountant about it as well.
Yeah, perfect. Thank you.
Okay. CFSBP is also an option for businesses in business 2 years or more. Same deal. It's still highly dependent on accountant prepared business plan. Um, CSBFP is a really great option for, say, you own a franchise and you're looking to refresh your franchise. and you need a couple $100,000 to do that, this is a good option. But again, come to the table with something prepared by your accountant to say how it's going to impact your business. It goes a long way. It really, really helps. Okay. And the last option for businesses in business 2 years or more, I mentioned Scotia Total Equity Plan on the personal side. On the business side, we have something called Scotia Flex. So if you own a business and you own the building that your business is in, we can lend against that property. If you own it free and clear, we can lend against it. This is really helpful for setting up things like operating lines. So I'll just give you an example. Client came to us and they said, "Hey, I'm dealing with a company in Europe. For the last 5 years, I've ordered my equipment from them, and they've given me 90 days to pay, which has worked out great because I get the equipment, I sell it, I turn around, I give my customers 60 days, and that gives me 30 days to pay my suppliers. My supplier has now come to me and said, no more 90 days. We need payment up front before we will ship the goods. So now, I'm buying on average $200,000 in equipment every month that I'm reselling. So all of a sudden, I need a $200,000 line of credit. So Flex is a great way to make that happen. You own the building that you're in. It's free and clear. We can easily put a line of credit on under a Scotia Flex, give you an operating line for $200,000 and basically solve your problems. So that's just a really quick example of kind of a situation where that may happen. Or say you own the building that you're in and the building next door comes up for sale and you've got half the money and you need the other half. Scotia Flex is a great way to do that as well. Lots of different uses for that particular product. So, okay. All right. So that is a little bit about funding your business growth and expansion. So I do, that kind of was the end of everything that I was going to talk about. I do have some bonus stuff here, but I'm going to just pause to kind of talk about how you can reach us. If you want to talk to me directly, my contact information is there, my cell number and my email address. All of these lovely people here, Diane, Kike, Michael, Warren, Ade, Sean, Jamie, Kike again, Manmeet, Siji, Yatunde, and Daniela. They are my small business banking team. And they are at these different Scotiabank locations throughout the Hamilton area. You can drop in, you can see them. If you want to speak to any of them, you can send me a message and I'll definitely put you in touch with them. And that's kind of everything that I had prepared on the agenda. I do have more, but I'll pause again to see if there are any questions.
I think we're the going as we're going. I'll just give it 30 seconds on the Q&A here if it fills up.
Sure.
But I'm all here for some bonus material.
Awesome.
But, got it. Well, Keith, you keep going, and if any questions pop in,
All right.
we'll continue to jump in as unawkwardly as possible.
Perfect. Okay. All right. So bonus content, investing for small business. So why would a small business need investments? A few different reasons. Emergency savings. So if the pandemic taught us one thing, it's that it might be a good idea to have a little bit of money set aside just in case of an emergency. The pandemic was something very specific, which impacted a lot of businesses. But from week to week, month to month, in my job, I see businesses that, stuff happens. Businesses get shut down. Things catch fire. Water mains break. There's construction outside your door and all of a sudden your foot traffic is gone. There's a lot of different things that can happen that can impact your business. Having a little bit of emergency savings is a great idea. So that might be one reason why you would need to save. Surplus funds is a second thing. So, if your business is doing well and you're generating cash and you're building up cash and retained earnings within your business, when you leave that money sit idly, it's not working for you. So generating some surplus income from that is a good idea as well. And the last thing for small business owners, the thing that small business owners don't have that people who work at the bank have, is we have a pension plan. You don't have a pension plan, so you have to self-fund your own retirement. So that is something also that you may want to save for through your business. Okay, so really it comes down to kind of two important questions when it comes to savings and investing. What are you saving for, and when will you need the money? So I've got some examples here of kind of what you might be saving for. Buy a piece of equipment. Maybe you want to buy the building that your location is in. And then when will you need the money? We talk about short, medium, and long term. So short term is anything less than 3 years. Medium term, 3 to 5. Long term, greater than 5 years. So those are the two important questions. And then we just put them together. So if you're saving for an emergency and you think you might need the money in less than 3 years, then the solution is a high interest savings account. We have a lot of 2 or 3 different options that we can use for that. You're saving for a piece of equipment and you might need it in 3 to 5 years. We've got options for you there as well. High interest savings account is a good option. Maybe locking some money up into GICs to earn a bit more interest. Or maybe you want to put it into a kind of medium term, low risk mutual fund, something that's going to generate a little bit of income and possibly some capital gains, and is going to be a better tax treatment than a GIC or a HISA would be. So then, income, 3 to 5 years, GICs, mutual funds. If you're saving for your retirement, generally that's less or greater than 5 years away. Mutual funds, iTrade, which is our discount brokerage trading platform, or our wealth management partners are the way to go for that. So it's really simple. You take your 2 questions, you put them together, you come up with a solution. Okay, no matter what you do, the answer is probably what we like to call a PAC, or what someone referred to earlier as a PAP, PAP, and that is a monthly savings plan. So if you're saving to pay your tax bill or your government remittances, a PAC to a savings account is the way to go. Saving for an emergency, PAC to a savings account. Saving for equipment, PAC to a savings account or a mutual fund. Saving for retirement, a PAC to a mutual fund is the way to go. So, on the personal side, a lot of you probably are saving for something on the personal side and do already have one of these, whether it's for, retirement, your kids' education, you're saving for a car, you're saving for a wedding, all these different things. The answer is a PAC. So don't underestimate the power of the PAC. And I've just kind of, to help you remember it, I got a little Pac-Man symbol there. If you do go into to speak with your business banker, ask them about PAC. Say, like, how can a PAC help my business? And they will probably ask you some questions like, what are you saving for? And when will you need the money? So we'll go right back to that. And then the answer is going to be, some kind of monthly savings plan to some kind of savings products like a high interest savings account or a mutual fund or a GIC. Okay, so I talked a little bit about surplus funds and what's happening when you have money sitting in your bank account and it's not doing anything. So money that's just sitting there is losing purchasing power because of inflation. So if you've got an extra $50,000 just sitting in your operating account, if you do the math, and you can see on the right-hand side here is a little calculation, which you can Google. It's called the Bank of Canada Investment Calculator. And what you do is you put in your amount that you've got sitting around, start year this year, end year next year. The annual interest rate that you're getting on your funds is usually, if it's in an operating account, in your day-to-day account, it's usually zero. And the annual rate of inflation, was as high as 3 or 4% earlier in the year. It's recently come down to about 1.6, so I've kind of averaged it out at 2%. But even at 2%, your $50,000 a year from now is worth $49. So you 49,000. So you've lost $1,000 in purchasing power because your money's just sitting there. So if you don't need that money, you can invest it. Throw it in a high interest savings account. You're going to earn some interest on it, which is going to help you offset the impacts of inflation. It's going to help you offset the cost of your banking as well. And it's generally going to help you make this money work for you. The other thing that I will say is, people always say, how can I beat the bank? Well, the bank loves it if you just keep your excess cash just sitting in the operating account, because we get to pay you no interest on it, and we get to lend it out, and earn interest on our end by lending it out to people. So by by doing this, you're beating the bank. Secret number 5 or 6 is that we would love you to keep the money just sitting in your operating account, but it's not in your best interest for a number of reasons. So move the money, get it working for you, and you know what, you will not regret it. So okay. So that's it. That was the kind of bonus content that I had. At this point, I'm happy to kind of take any questions
I
about
think
anything that I've talked about.
there was one more question. Oh, they're coming in now. Oh,
Okay.
we got a thank you, and we have does Scotia have any debt-free financing?
So debt-free financing, like uh, financing for like religious reasons where you can't pay interest in that.
I'm not 100% sure, but I think that my presumption, I don't know.
Okay.
I think I'll wait. I'll do the thank you while we wait for the answer, because I thought that was incredibly insightful. I think I made some notes for my personal finances as well there, as I um not personally lucky enough to have some money sitting in the bank like that, um but I thought it was incredibly informative. And I think the context in terms of uh, the ability for people to judge based on where their business is in the moment they're in. You provided insights, whether they were very early in their stages of development, right, to where they do have that opportunity to uh, invest their money wisely. I guess uh, on that front is, how do you I mean, I'll ask this question. Every small business has dealt with fluctuations due to the pandemic. How do you
Yeah.
maintain your flexibility in case things take a downward turn, while also managing to grow the revenue on the money? Like, what's the flexibility opportunities there? Oh,
In terms of flexibility, kind of, I'll go back to a couple things that I said. When you start the relationship with your bank, if they offer you any kind of credit, even if you don't need it, it's a good idea to take it. There are a lot of products that the bank offers that don't have any fees. So, for example, if you take advantage of a $5,000 overdraft, you only have to pay for it when you use it. So it sits on your account, and if you never use it, you never pay for it, right? If you take advantage of a Scotiabank for Business Visa, you pay for it when you use it. So when you advance off of it, you pay interest. When you don't use it, it's just sitting there. There's no monthly fee or anything like that. So that helps maintain your flexibility, right? So if you have credit available and you're not using it, you may use it from time to time, and it's a good idea to um, kind of dip in every once in a while if you need to, just to kind of keep things active. But that will help you maintain flexibility. And if you have extra money and you can put it aside into like something like an emergency fund or a high interest savings account,
Mhm.
that will help you maintain your flexibility as well. And again, using that pack strategy. So like if you're growing your business and you want to say, you're looking at around at your business and you're like, wow, this place needs some work. A year from now, I'm probably going to need 100 grand to kind of fix things up or refresh the place. So maybe what I should do is start saving a little bit of money now, because the other thing that will help you when it comes to lending is if you show up and need $100,000 and say to the bank, well, I've already got 15,000, the bank will go, oh, great. We immediately identify that you've got skin in the game, right? You're willing to put some money towards this, and we'll help you fund the rest. It becomes a partnership, and it makes it easier to approve the loan. So all of those things help you kind of maintain your flexibility. It's just having all those safety nets, credit available, savings available, um, and a solid plan.
Awesome. So maintain as much flexibility as possible because you never know when you're gonna need it. Well, listen, Keith, I think additionally, an excellent job of keeping right on time. Impressive job there. And greatly, on behalf of the chamber, our membership, thank you to yourself, to Scotiabank for supporting us here. I know we mentioned it to you, but we will be sending out Keith's presentation along with all the presentations from our Small Business Week programming. Uh, so we'll share it out with our membership going forward. But appreciate everybody joining us here today. Hope to see you tomorrow. And Keith, uh, oh yes, I was going to just say, great slide to end on. Thank you very much, and wishing you a great day ahead.
You too. Thanks so much, Greg.